IREN stock is finally showing a hint of green today, and that alone is worth talking about. After 7 consecutive red sessions following the explosive run to a 52-week high of $76.87 on the 5th of November, IREN is now trading at around $47.29, up roughly 1.98% on the day. Markets are broadly down again, which makes the bounce even more interesting. When a stock that has been hammered for over a week suddenly shows resilience while the wider market is weak, it often tells you something about where the momentum wants to shift next. So the big question is, what is going on with IREN, and is this the beginning of a base forming, or just a pause in the selling? To understand today's move, we have to revisit what's happened over the last 10 trading days. Just a week and a half ago, IREN was the market darling. The stock hit fresh highs after that massive $9.7 billion multi-year AI cloud deal with Microsoft. It was seen as one of the fastest-growing AI infrastructure players in the world. The pivot from Bitcoin mining to high-performance compute, GPU deployment, and AI data center infrastructure sparked huge optimism. Investors flooded in. Price target soared. Analysts praised the company's strategic position. And social media amplified the hype even further. At the top, the stock was up well over 500% on the year. But momentum stocks that rise that quickly often become unstable. Their valuations become stretched. The story becomes priced in before the numbers arrive. And when reality shows even a small delay, the stock can retrace sharply. That's exactly what happened with IREN. When the company reported earnings, the numbers were strong but not flawless. Costs were rising. Depreciation was rising. Share-based compensation was rising. The business model was still early in its transition. The market realized it had priced in too much too soon. And that's where the selling began. As IREN moved from $76 down into the 60s, some traders assumed it was just a normal pullback from a sharp run. But then key technical levels were broken. Then the stock lost momentum. Then macro pressures hit the entire tech sector. And as markets sold off, riskier stocks like IREN were hit the hardest. Once the $50 mark was broken, everything accelerated. Stop-loss orders kicked in. Algorithms triggered selling. Weak-handed traders capitulated. And the stock plunged from over 76 to under 48 in barely over a week. This entire stretch has been dominated by fear, not by new negative news. And that is one of the most important points to understand. Throughout this decline, there has not been a new announcement saying the Microsoft deal fell apart. There has been no regulatory issue, no financial scandal, no operational disaster. The fundamentals of the company remain the same. The decline has been a sentiment reset, not a structural collapse. That brings us to today, where IREN is finally flashing green. And while it is only a small percentage move up, the context matters far more than the number. Because markets are down again today. Tech is down. AI names are under pressure. Yet IREN is green. That tells us that two forces are probably at work. First, bargain hunters are stepping in. After near 40% drop from the highs, some investors feel the risk-reward balance is shifting again. Second, short sellers who rode the decline may be covering positions, taking profits, and preparing for potential base formation. But today's bounce is not necessarily a reversal. It's simply the first sign that the selling intensity may be slowing. When a stock plunges day after day after day, it eventually reaches a point where sellers are exhausted and buyers begin testing the waters. That's what today looks like. It's the first spark of balance returning to the order flow. The key question is whether this stability can continue into the rest of the week. Now, let's talk about the deeper issue behind IREN's decline, because this is where long-term investors and short-term traders tend to disagree the most. The short-term view is simple: the stock went up too fast and now it's being repriced. The long-term view is more complex, but also more promising. The long-term view revolves around the idea that the AI infrastructure boom is still in its infancy. Demand for high-performance compute, energy-efficient GPU data centers, and low-cost power solutions is growing exponentially. Hyperscalers like Microsoft, Google, Amazon, and Meta need massive amounts of compute capacity to train and run next-generation AI models. And companies like IREN, which specialize in the energy-efficient, vertically integrated model, are uniquely positioned to fill that capacity gap. This is where Eric Jackson's thesis becomes important. Jackson has been one of the most outspoken and clearly articulated bulls on IREN. He argues that the entire market is still underestimating the scale of the coming AI infrastructure build-out. He compares it to the early years of Amazon Web Services or Nvidia's early GPU ramp. His view is that market volatility in the short term doesn't matter. What matters is whether IREN continues to expand capacity, secure hyperscaler partnerships, and deploy high-performance computing at scale. In Jackson's eyes, the recent decline is not a thesis breaker. It's a test. It's a period where the market flushes out speculation and forces the story to be rebuilt on execution rather than hype. And that's the key turning point we're approaching right now. The hype phase ended last week. The fear phase ended yesterday. And today may be the beginning of the consolidation phase. Consolidation is where the chart stops trending sharply up or down and begins to stabilize. It's where long-term investors quietly accumulate while short-term traders step aside. And it's often the phase that sets the stage for the next major move. From this point forward, what matters most is not the noise, but the milestones. Investors will want to see clear updates on GPU deployment at IREN's Texas campus. They'll want to see more detail on the Microsoft contract timelines, especially how much revenue gets recognized and at what margin. They'll look for clues about future partnerships or expansions. They'll look for operational progress in power efficiency and high-performance compute scaling. These milestones will determine whether IREN builds a strong base and moves higher, or whether the volatility continues. Right now, the emotional cycle has shifted. The panic selling that defined the past week has cooled. Today's green session marks the first moment where buyers showed more determination than sellers. And that matters because turning points in momentum tend to arrive quietly, without big headlines or loud announcements. They begin with subtle signs, smaller declines, stabilizing price action, and single green days emerging unexpectedly in down markets. In many ways, today is the first test of whether the market believes the long-term story still has legs. If IREN had fallen again today while tech was dropping, the narrative would have been one of continued fear. But that isn't what happened. The stock showed strength. That alone suggests that there is still conviction behind the story, even after a brutal correction. So what should investors expect from here? The reality is that we are entering a critical period of price discovery. If IREN continues to stabilize around the mid-40s and begins forming higher lows, that could be the foundation of a new base. If it pushes back above the $50 level and holds it, that would be a sign of renewed confidence. But if the stock breaks down sharply below the mid-40s, then today's green move will simply be a brief pause in the broader downtrend. For now, the key message is balance. This is not a moment for blind optimism or blind pessimism. It's a moment to watch, observe, and understand that the stock is transitioning from emotional selling to rational evaluation. And in that transition, opportunities often emerge. To close out, today's green day matters. Not because of the percentage gain, but because of what it represents. The selling pressure is slowing. Buyers are testing the waters. And the long-term AI infrastructure thesis, backed by people like Eric Jackson, remains intact. IREN's future will depend on execution, not hype. And the next few weeks will be critical in determining whether today's bounce becomes the beginning of a recovery, or just a temporary pause. Either way, the story is far from over, and today's subtle shift could be the first sign of a new chapter.